So, my biggest role in investing is that you believe in the company that you are investing in. Don't buy into the hype. Don't listen to some YouTuber that's saying, oh my god, this company named Hippo is going to 10x or go up in value because, it's this awesome insurance company. Then they give you this fake idea about this company that is unprofitable and isn't doing very well financially. Like they're not making a bunch of money. And are they going to grow? You don't know. But since you're a new investor, you decide, hey, I'm going to go invest in this company called Hippo and make a bunch of money. So you go invest in the company and it starts to tank and you're like, oh my god, I'm losing all my money. And then you look it up and you find out that the company isn't doing very well. They're negative profits, they're not making money, and their revenue sucks and they're not growing. Alright, now you're getting worried, and then you sell out of the company because you don't like the company anymore, and you lose a bunch of your money. Okay? So, that is really important that you do your research before you buy the company instead of doing the research after you buy the company. Okay? Don't just buy Tattooed Chef or another company because some person like Jeremy Financial Education said for you to do. Alright? Because they really don't know what they're talking about in these companies. They only talk about revenue and growth. They don't talk about their earnings, like that they're unprofitable. They don't even disclose that they're unprofitable. They won't even tell you about that. So it could be a good company, but do you really know that this company is good? Do you really think that they're going to grow like some, plant-based food company? It could potentially just go up really fast and then tank, and then they could do good as a company. They are going into a lot of stores, and I think they're actually doing pretty good, but this dude thinks that it's going to be the next Tesla, and the next Tesla, you do not know what the next Tesla is. And he had a lot of people buy into this company at around $25 or $20 a share, and it just tanked down to $12 a share. So if you did get into it, I would say the best price to get into Tattooed Chef is $5 a share, and then you might have some upside potential because the company is more of a hype stock, and if a company runs off of hype, then it's gonna crash. It's not gonna do good. So be wary of the companies that these people talk about, and do your own research on them. And then Corsair Gaming. Now, Corsair Gaming is it's a pretty good company, and they do make money. So I actually got some shares of this company, but I sold out because the stock market crashed, and I wanted to get some other stuff in the stock market. So look, they're down year over year on their revenue and net income. So that means that this was more of a pandemic stock, because in March of 2021, Q1, they made so much money. Their net income was up 3,700% year over year. And why do you think that happened? Probably because of the pandemic, and everybody bought a bunch of stuff for their recording studio or their gaming, because you can get the lights and then you get the good gaming computers. And then look, their earnings slowly dwindled down, and then now in Q3 they were down 95% year over year because everybody already bought the stuff that they need during the pandemic, and now they're starting to go back up in revenue because all this huge buying frenzy is over with. So now they got to truly make money instead of just get lucky because of the pandemic. So that caused their stock to just go up so much, right? And it could still be a potential buy if you believe in the company. Do your research on this company before you buy into it. And it's it's a Jeremy Financial Education stock, so a lot of the people that buy in are from that channel, and it could be potentially very risky for you to get into. I don't know much about the company or how good their computers and stuff are, because I truly am not going to pay overpriced prices for a company and for their equipment, right? A lot of people will just go to Walmart and buy some decent equipment for their setup, and that's it. Like, most people don't go out and buy $1,000, like equipment for their setup. Or like, see this little recording area? I got a ring light for $30, and that's it. Okay? And then I use my phone as my webcam because it works really well. And it's pretty good damn quality, And I think that it's pretty crazy that these people buy like these companies. Like, there's people that like literally worship Jeremy LaFufu. I think like they literally just like believe every single thing he says, and then gives them thousands of dollars to invest into the same companies that he talks about on YouTube. Like, people buy his course because he's gonna explain to them how to like find the next Tesla, but then he literally just has them buy the same companies that he talks about. So I think a good company might be, a company that crashed a lot but has really good fundamentals, like Facebook, for example. Like, Facebook dropped 200 billion in market cap recently, and their all-time high was $384. It's down $200 from its all-time high. Do you think that Facebook is going to go back up one day? I mean, probably. I don't know about their whole metaverse thing, and I don't think that the metaverse is going to take off like people think it's going to take off. I think that, like, you got to buy the VR equipment, the headset, and then you got to, like, use a certain platform for the metaverse. And the metaverse is only one, like one metaverse for every company, right? So everybody makes their own metaverse, but you have to be able to go in between metaverses through the metaverse. That's what the metaverse is. It's kind of like the internet. You can go into every single website through one thing. So you can just jump in and out of different metaverses, right? So they were down on net income, and I'm pretty sure this was the first quarter that they didn't grow in on Q4, so their stock tanked. So they're always growing as a company, right? Every quarter they grow in revenue and they make more money, but their net income was down on year over year on Q4. However, they made a lot of money in Q4. They made $10 billion. That's a really good amount of money they make. So, their net profit margin was 30%. Like, that's pretty good net profit margin. So 30% of their revenue they made profit out of. Like, Tattooed Chef, let's see their earnings and revenue, right? So they had negative 13% net profit margin. So out of the $58 million in revenue, they lost $8 million. So, they're not doing very well. So they're actually unprofitable, and they haven't made any profits yet as a company. It's not good. So they're pretty much don't even have a PE ratio almost. Yeah, their PE ratio is not available. So if you see a company with a not available PE ratio, that means they're really unprofitable and they're not really making any money. So you gotta watch out for that. And like, this dude is literally like saying that this company is the next Tesla, and I don't really think that it is. I don't think it's the next Tesla. Like, you got to be a special company to be the next Tesla. To go from, almost going bankrupt and like not a high market cap to like the third highest market cap in the world, or like the fifth. Like, he's like on the top 10. Tesla's on top 10 of most ETFs. Like the VU, like the S&P 500 ETF, top 10 of it. That's not what TTCF is going to be. TTCF, Tattooed Chef, is a soy boy, like, vegan company. Do you really think some vegan company is going to be the top freaking company of the world, like with $1 trillion market cap? No, it's not the next Tesla, and it will never be the next Tesla. Same with the Corsair Gaming. They're never going to be the next Tesla. This dude thinks that this company, yeah, and people believe him. Like, that's insane. And they lost a lot of money because of it. I don't even know how people still listen to this guy after what he's done to people with these crappy stocks. So, what you want to, like, in my opinion, and Warren Buffett's opinion, you need to invest into companies that are solid, that you believe in, and that you know will grow over time. Facebook will probably grow, but maybe not, because they seem to be declining recently because a lot of people are leaving Facebook. I don't even go on Facebook that much anymore. But people still use Instagram, which is part of Facebook, and Instagram is still very popular. You can make a lot of money off of Instagram, and it's a pretty solid platform. So same with Facebook. People still use Facebook a lot. I mean, they have like 3 billion users, so how much more can they grow? That's the thing about big companies. Like, they get so big that they can't really grow anymore, you know? Like, they stop growing because they're like meeting their maximum limit. Now they can still grow, but yeah, it's going to be rough and hard for them. And they got to get into the third world countries to, like, they got to start getting those guys out there. But Google will definitely keep growing. They got the YouTube, they got Google, and Google will always be like the #1 search platform. So people are always going to use Google. I mean, some people use DuckDuckGo, but definitely not as many people. And sometimes they use Bing or whatever. But Google is always going to keep growing. And so is Amazon, because people buy things off of Amazon, right? So Google is actually down 10% from year to date, and they're up 26% from a year ago. So they're actually like going back down towards where they were 1 year ago. But I think that Google eventually, whenever this market consolidation thing is over, I think Google is going to go back up because they're a very profitable company and they're always growing. I don't think they've ever not grown, right? So their revenue is 32% up year over year, and then their net income is 20 billion, 35% up year over year, with a 27% profit margin, right? So they're making a lot of money, and 20 billion of the income of their revenue is 75 billion, and 20 billion of that they made as a profit, right? And every quarter they're up year over year. They're always making more money, and I think they're going to continue making more money. I think in a year from now, they're probably going to make 150 billion every quarter. You know, like, this is every quarter, not every year. Like, they're making like 200, 300, 400 billion dollars in a year, maybe 300 billion. But that's a lot of money to be made, and they're going to keep making more money, and YouTube is getting bigger. A lot of people are watching on YouTube about things like people like Mr. Beast have like almost 100 million subscribers, or he does, I don't even know. But like 10 years ago, nobody had that many subscribers. Like, I remember whenever the first person got 1 million subscribers, and that was huge. Like, YouTube is huge. It's going to get bigger and bigger. I mean, eventually it'll slow down, but there's always people being born into the world, so. But they also have other things they can branch out into. And Amazon, they have AWS, their web server. Like, they have such a big server, they can host all these companies on it. Except for Gab. I think they kicked Gab off of it, but whatever. They're still going to become very profitable off of that company. They actually make more money off of Amazon web servers than they make off of their products, you know. Like, so what they do is they have people ship the products that they want to sell. They ship it to Amazon warehouse, and then they package it from Amazon and send it out through their company at Amazon warehouse. As eBay, you ship it from your house to them, to whoever buys it. So Amazon's more legit, so you can actually mail Amazon the products, and then they'll see your products, and if they're not legit, they ain't gonna sell it to people online. So it's a lot safer to buy your products on Amazon. Um, but Google, Amazon, Apple, I think those are all good buys right now. I think that they're pretty low in price. I think they're really cheap right now. I think Google's definitely cheap. And I don't know, like they're gonna do a stock split soon, and whenever they're normally a stock split, the price always increases after the stock split. So you buy one share of Google, tomorrow you're gonna wake up and have 20 shares, right? They're gonna do, yeah. So that's what they're gonna do, and then the price will be like $100 something. So, and then a lot of people can buy in and start trading options on it because it's cheaper, because you need about 100 shares to trade options, which is really expensive if you have to buy 100 shares of Google right now to trade options. So once the price tag is lower, still the same amount, like you're still buying the same thing, but it's just, there's just more shares out there. So, but you'll have 20 shares if you buy one share right now, eventually. And normally, like, most of the time it goes up after a stock split. Stock split might happen and then the stock might drop, but it's definitely going to go back up, and it might go up even more because more people are going to buy into it because it's cheaper. That's pretty much what happens. But yeah, and Tesla stock, right? Tesla is a very risky play. Okay, Tesla could just drop down to $400 a share, because compared to Toyota, Tesla makes like 1/100th of what Toyota makes. Toyota has a revenue of $7 trillion every quarter. Now, Tesla has a revenue of $17 billion every quarter. So, but the reason that their PE ratio is so high, 162 PE, is because they're a growth company, and people buy in expecting Tesla to be like a lot better in the future. So 20 years from now, how many cars are they going to produce? Is Tesla going to have like the same revenue now as they do in 20 years from now? Probably not, because every quarter they're up year over year. So they're always like growing, they grow every quarter. Like, look at it, it's all in the green almost, They grow every quarter, and I think that eventually they're going to be like one of the top car companies. Like right now they don't sell as many cars as Toyota or Ford or GM, but eventually they're going to, if they can lower their price down and like make them more available, to the average person, because people aren't trying to pay $40,000 for an electric vehicle right now. People are waiting for Tesla to be like $25,000 a car. But once they are able to make it affordable for everyone, and a lot of used cars start coming out for Tesla, so someone buys a new Tesla, then sells their old one, and then you can buy pre-owned Teslas for like $10,000, and it's going to be like a legit nice car, that's not going to break down on you. Then yeah, people are going to start buying them, and then that is whenever the company explodes and they start making $100 billion, $200 billion every quarter, like Ford. Let's see how Ford is doing. Ford eventually. I mean, their revenue is $37 billion, so Toyota makes way more money than Ford. Wow. Yeah, so I mean, Tesla's catching up to Ford in like revenue already. That's insane. What the fuck? Yeah, GM, they're only making $33 billion. Oh my god, dude. Like these, like wow, that's all they're making? Like, look at, is this like in yen or something? 7 trillion? I don't know. Tesla's doing really well though, compared to like Ford and stuff. Like Tesla just started out. I'm pretty sure, like JPY. What is JPY? Oh, I see. Damn, dude. I'm fucked up. That fucks me up. 7 trillion yen to USD. So they're making about $59 billion a quarter. Alright. So I screwed up on that one. Not 7 trillion. That's I knew that was way too much. But Toyota is one of the top car companies. Dude, like Tesla's catching up to them really quick in profits. Like they're gonna wow. Wow. I didn't even realize that. So Toyota Motors is doing all right too. I mean, they're doing better than all the other ones in profitability. So I don't know why they would put it in yen on the American way of looking at it. So you got to do that. So I don't know. Tesla, it's overvalued, but it's priced in for the future. I think that Tesla's a really good company. I really hope that they do good. I kind of want it to drop down to $200 a share so I can start buying in. But hey, I don't really want to buy in yet because I think the price is too high, and I think it's not worth as much it is the price tag. So I think it's overvalued. So I'm waiting, see what happens with Tesla. But these are companies you want to look into if you're a new investor and you want to start investing. I would just look into solid companies like Google, Amazon, Toyota, Apple, all these these really good, profitable, amazing companies that are not overvalued, or if they're undervalued, because Toyota's undervalued right now. And I think that with this price drop, I think Google is probably worth about where it is now. Once they do their split, it's going to be $100 a share. I think in 10 years, Tesla could be worth $2 trillion. I mean, how did it get to $1 trillion? Apple's almost $3 trillion. Apple could be worth $5 trillion a share. Trillion. Apple could have a $5 trillion market cap in 10 years from now. So you're gonna have to look into that. You want to hold for years, 10s, 20s years, 30 years. Because that is how you start making money. That's how Warren Buffett became a billionaire. He held for 30, 40, 50, 60, 70 years. If he bought his first stock at 11, he held that company for 80 years. And he made billions of dollars, a shit ton of money. So that's my thoughts on it. I wouldn't recommend you buy any of these companies that I talked about. But yeah, y'all have a good night. Like, subscribe if you enjoyed the video, and hit the notification bell, I guess. I don't know. I'll see you in the next one. Thanks for watching.